Welcome everybody. I'm here today with Rebecca McColl from Johnston Carmichael, who are our affiliate partner with the Engineering Manufacturing Network. And we're going to have a brief, quick session on R&D tax credits and the changes that have come in and how they can benefit engineering and manufacturing businesses. So without further ado, I will crack straight on. So Rebecca, there have been a number of changes within R&D tax credits, and in terms of a little bit harder to claim them and the relationship with Patent Box. Can you just do a little bit of a briefing for us on that to start with?
Yeah, of course. Thanks very much. It's lovely to be here. So yes, quite rightly, the R&D tax relief scheme has been fairly unchanged for a number of years, decades to be fair, and then obviously the raft of changes that have come in place. And particular ones that are now in effect are those that come in for accounting periods from the 1st of April 2024. So pretty much everybody now, these are the new rules for the R&D tax relief going forwards. So, the good news is, I have to say, that R&D tax relief is still a thing. The government is still supporting it. It's still very financially viable for companies to claim it. So I think anybody's got a curiosity about it, definitely get in touch with your advisor. So some of the changes that have come into place are the fact that now they are essentially, it's a merged scheme for the vast majority of companies. There is still some support for those small companies that are classed as loss making and those that are classed as R&D intensive. So quite often they fall into the category of the newer companies just starting out. So they're kind of ring fenced and given their own little special treatment. But for the vast majority of other companies, it's what they call the single merge scheme. So this is the R&D expenditure credit. It's now an above the line credit for everybody, regardless of whether you're small or large, regardless of the size of the number of people you've got on your payroll. So everybody's being treated the same essentially. Good thing to take away is the fact that it's still worth 15%. So £15 in every £100 is what you get in return for that. So still, financially viable for a lot of people. Other things that they've brought in there are, there's very much now an onus on contractual arrangements. So who's doing the R&D, who's asked for the R&D to be done. So going forwards, when you're speaking with your advisor, do be expected that people will ask about if there's a contract in place. Is it being quite clear where the IP for that lies? Again, financial burdens are some of those questions that come into play there. And in addition to that, another one that may or may not affect some of the people here in the Northeast, depending on where they use their subcontractors, is overseas subcontractors. They are starting to limit what can be claimed for those people who are outside of the UK. So the UK, the R&D tax relief is to benefit UK companies, and what they're wanting to do with these raft of changes is also to make sure that the people in the supply chain involved in the R&D are UK based as well. So where previously you could use a subcontract, for example, in Poland or in Germany or even further afield in China, simply because it was cheaper, you're manufacturing over there and they import it back. That is now it's limited. Unfortunately, if the capability exists within the UK, you can only include those costs for subcontractors within the UK. So that could be a big change for a lot of people. There are, however, HMRC have left the door open for them to be some queries on that, some exemptions. So there's a list of exemptions there, which I'll not go through now because they are very, there's a lot of debate about what actually would be able to be included. But if there's only one place in the world, for example, where that subcontractor could exist, you can still include them, but there has to be a very good reason for it, and it can't simply, unfortunately, be price-based, which is a little bit frustrating for some businesses. So they're the major changes that have come into there. Obviously, we've got the pre-notification, I think is also a really big one for companies to be aware of. And this is for companies that have never claimed the R&D tax relief scheme. So essentially what you're needing to do, if you haven't done an R&D claim before, within 6 months of the end of your accounting period, so imagine your accounting period finishes December 25, you would need to pre-notify HMRC before the end of June 26 that you intend to make an R&D claim. By pre-notifying, you don't have to make a claim, but if you don't pre-notify and you want to, you essentially lose that possibility.
Okay, so going to go slightly off track here. So
Okay.
We've had a number of EMN companies on the smaller side that have been a little bit frightened about applying for the tax credits because the scheme has become more complex, and sometimes their accountants or the people that they're using are more reticent and worried about back claims or the investigations that HMRC will come in and do. Are there any words of advice that you can give people if they've either stopped claiming or they've decided, no, it's a little bit too complicated, I don't think we'll bother?
Okay, yeah, it's a really valid question then. I appreciate a lot of companies on the landscape, especially the engineering and manufacturing, have been sort of put on the back burner, a little bit frightened as well with HMRC. Nobody likes HMRC looking into their business. So in terms of R&D, one thing I would say is if you've got a strong project, it's just making sure that you document that and you keep your records for those strong projects. When we're looking at what qualifies for R&D, it doesn't need to be cancer curing. And I don't mean that flippantly, but R&D, the nature of what the government are trying to do is raise the baseline. What can we do? What is our capability within the UK and worldwide? Can we do projects that are looking to improve upon that? So within engineering manufacturing, that could be a huge range of things. If they are looking to increase throughput in their production lines, if they're looking to introduce new materials or new robotic lines, is that looking to improve the industry? So if they've got strong projects like big, bold projects, I would always recommend them speak to an advisor, because just because their perception of what is R&D, it may be very, very different to actually what HMRC's idea and definition of R&D is for tax purposes. So again, those strong projects, being able to document it, being clear as to what the objectives of those projects are. If you are looking to improve upon something, make sure you can measure it. You know, if you say you're going to do something faster or quicker or cheaper, or it's going to be greener or more sustainable, how are you actually measuring that? So that's a good optic to be able to have there. And then again, also, projects need to be technically challenging. And I'm going to say this, having spoken to a lot of engineers myself, they're not always great about saying what was challenging about it, because they always see themselves as being just problem solvers. And they'll flippantly say, oh, well, it was trouble, but, at the end of the day, I managed to work through it. It's documenting how they managed to work through it and showing that it was technically challenging. And again, finally, it's that evidence-based things. If they've done some areas of a project and it's failed, make a note of them. It's those failures that really do tell people that it was challenging. And again, from an engineer's point of view, they hate to talk about what didn't work. I mean, I am laughing, but it's one of those things when I speak to them, I always have to scratch the surface by going, if something goes from A to B and it works out, that's great, okay? It's not R&D, but that's not what happens in engineering. It's constantly bumping up against problems and having to find an alternative to be able to get around that problem. So in that, sorry, I'm probably going a little bit around the houses and talking about that. But again, the message is, if you've got an R&D project, have a word with an advisor. Don't be afraid to say and explain what you've done. And then from that, it's kind of working out as to whether that does fit within HMRC's parameters. Just looking, also mentioning on the idea of inquiries and compliance from HMRC. The messages we are hearing is that it's kind of going back business as usual.
Okay.
Obviously, during 2023, 2024, and to a certain extent 2022 as well, there was a huge number of inquiries, compliance checks. I think there wasn't anybody within the business who didn't either have experience of it themselves or knew somebody who was going through a compliance check. So that has kind of been a big surge, but it is starting to settle down. Again, I think a lot of the reasons are that pre-notification that's been brought in. There's a lot of companies who simply haven't been prepared for it, so they've missed the opportunity. So they know that the number of claims going in has reduced, so naturally the number of compliances out the other end have reduced on that as well. And I think another really important point to make is that companies are investing, and let's be fair, it's tax relief and it's about getting money back. If companies are investing in R&D, they should be documenting it accurately, because obviously their accountants, their bookkeepers in the background will know what they're spending. If that's a substantial amount of money, they should be looking to make a claim if it's valid. Yeah, I think it's just to reiterate that it's a tax relief that's continued to be supported by the government. So it's there for people to claim. So I would, again, just to reiterate, get people to reach out to their advisors and see what they can do, but do it in an orderly fashion. It should be when they're speaking to their accountants, hopefully not just at that annual point on the quarterly touch points. to have that conversation about, well, R&D, we have had a big spend on it, financially, what will that look like for us at the end of the year? So they themselves can plan for that cash coming back into the business. A typical R&D, one of the big cost centers in there, the cost center we call it staff costs. So people that you've got on payroll, people who've been involved in the R&D themselves, we can attribute a percentage of that time. So for example, we'll take employee A, if he's spending maybe a day a week on R&D projects, that would work out at 20% of that person's salary. So that's normally, if companies, especially engineering manufacturers, they might have a large payroll, so they might have a lot of people working. So generally that can be quite an interesting sort of cost center for them. Again, I mentioned subcontractors. Again, the idea being the majority of those subcontractors would be within the UK, but there might be the possibility for them to be external. You are able to claim up to 65% of subcontractor costs, again, who have been involved in the project. And the key from HMRC is that they need to be assisting you with the technological uncertainty. So helping to iron out the problems in a nutshell. It may well be externally provided workers. Some people, again, peaks and troughs in their work. They may be bringing in external staff as an extension of their staff that they've got on the shop floor. So we could look potentially to include those, again, assuming that they've been involved in the R&D. Consumable costs, again, manufacturing, it could be that they are trying to do, maybe create a prototype, and each time the prototype isn't quite right. So you've got the consumable costs there that need to have been consumed, is obviously with the type there, ones that have been thrown away. Another improvement, I have to say, and it's taken HMRC a little while to come round to this, software has always been a one that's been used. But obviously software has changed, as I'm sure you're aware, dramatically over the last 5 to 10 years, cloud computing and data licenses. So these costs are now able to be included, which is quite a refreshing change. A lot of the cloud computing, so ones that use quite a lot of CPU usage, are using software that is essentially on the cloud. So that can be quite costly. So they are able to be included there. So in terms of cost, that's it. But again, depending on what the projects are, they may be heavier in some areas than the other. For example, prototyping generally can have quite heavy consumable costs. Yeah, and again, if you're looking to improve a process in a manufacturing, then it might be quite heavy on the staff costs for, a lot of number of people, but at low levels, but cumulatively that can be quite a lot.
Very significant, yeah. Okay, so we move on to patent box.
Yes.
So can you give me a very broad overview generally? What patent box, what is it? What does it do? And how does it relate to the tax credit system?
So obviously where we've got the R&D, companies may do R&D, naturally what can fall out of R&D projects that are successful is that they're able to patent a product. And patenting a product is great for a company. It protects their IP, it protects them against their competitors copying things. But where the patent box is different to the R&D is that patenting is what I like to refer to as a more mature kind of tax relief. Being able to put a patent on something it's not a quick thing that you do. You'll apply to file a patent and it can take 18 months for it to be published, and then maybe another 3 to 6 for it to be granted. But if a company does have a patent on a product that it's selling and it's being granted successfully, albeit that little bit of a waiting period, if they're making profits from that particular patented product, you are able to apply for patent box relief. So essentially, if I was to simplify, imagine a company's got 10 products that it sells and it's got a patent on one. The profit it makes from that one patented product, it can have a beneficial corporation tax on it. So instead of it being 25%, it may be as low as 10%. So for IP strategies for companies and working, how we're going to reduce the corporation liability going forward, it can be quite an interesting tax relief to be involved in. But at least to be aware of, what we are finding is that a lot of people aren't considering it because they don't really know a lot about it.
So if you've got a patent, it'd be mad not to put it into the patent box.
If you're selling something and you're making money from it, absolutely.
And can that be backdated?
So what happens is, obviously I have to explain that it's quite a long process to get a patent approved. It's by the patent office. What the patent box relief allows you to do is once it's granted, you're able to go back the 2 years to be able to claim what would be in that time period. The idea being that it is that the tax regime is aware that it's quite a slow process to get your patent approved. But yes, you're able to go back for the 2 years. It is what we call an elect-in process. So unlike R&D, where you can choose to do a claim yes or no once a year, you're not obliged, your projects may start and stop. with the patent box regime, once you elect in, there's the expectation that you'll continue that. If you were to choose to opt out, there is a period where you're unable to claim. It's 5 years, give or take, depending on the accountancy period.
So are there any other key points that we've not covered that you think really need to mention when it comes to tax credits and patent box usage?
Again, with both, some of the comments here are equally attributable to both the R&D tax relief and the patent box relief, is that you should be having regular catch-ups. A lot of people think that they speak to their accountants at the end of the year and then it's kind of a reflection backwards. That isn't really the most beneficial use of these tax relief schemes. It should be some punctual conversations where you can reflect on what you're doing and kind of also look forwards. In terms of the patent boxes, again, because it's so underutilized and it's not known as well as the R&D tax relief, ask that question. I think always speaking to an IP lawyer as to whether your products, your processes, or your manufacturing styles are able to be patented is always a good conversation. And then if it is feasible for your products to fall within the patent box regime and to have that feasibility study to let you know that what would be being within that tax regime. Again, that's quite a powerful position to be, especially for the finance directors, if they know that over the next 5 years that this great product that they've designed is able to be at a beneficial lower tax rate. I think that's quite an interesting place to be.
So this is the first of 3 opportunities to talk to Johnston Carmichael, with the first one about tax, the second one around corporation tax and then we're looking at inheritance tax and capital allowances. So watch this space and we'll follow up with some further short webinars.